Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of Tesla analysis. Today is January 27th, the day after Tesla announced its earnings result. The stock price right now is moving down by almost 8% at the time of this recording, which is 11 a.m. Pacific Standard Time. Tesla is right at $862. Last review quarterly earnings result announced yesterday, as well as looking at the stock price and project out to the next couple of days and the next couple of weeks to see where we could go. If you are new to my channel, please consider subscribing. I am a growth stock investor. I particularly invest heavily in Tesla. I'm also a trader, and Tesla is one of my favorite stocks to trade as well. I'd love to share my investing and trading journeys with you. If you are looking for more updates and guidance on a regular basis, feel free to check out my Patreon community where I post my regular analysis on Tesla, usually before the market opens. I will also follow up throughout the day with volume, with my thoughts, and what to do with certain types of options that you guys have. The link down below on Patreon page, so check that out, and I hope to see you guys there. Without further ado, let's get right into it. So I'm going to go over some of the highlights here very quickly. I'm sure there are a handful of channels out there that have similar coverage, so I'm not going to try to duplicate all of it. One of the things that I noticed on here is that the automotive gross margin for Tesla is roughly 30.6%, and excluding energy credit, it is 29.2%. So overall, you're looking at a gross profit of 30% for an automobile company that just started volume production a few years ago. That is phenomenal, and that is largely attributable to Tesla lean manufacturing and innovation, and the ability to constantly look at its manufacturing practice and improve upon itself. So I think that is definitely a character of a growing company that we all want to invest in. We know that the annualized vehicle production run rate of over $1.22 million based on Q4, that is phenomenal as well, right? So this is before Berlin and Austin start production of saleable vehicle. We are already looking at Shanghai and Fremont at 1.22 million. So if you add a full capacity of 1 million each from Austin and Berlin, that is about 3 million vehicles, give or take, by maybe the end of 2023. So within a short amount of time, less than 2 years time, Tesla is about to triple its production and delivery as well. I think you are not going to see a lot of companies like that, right? And we know that right now, Tesla is already achieving 30% gross margin, give or take. What would it take for Tesla to surpass 30% gross margin while producing 3 million vehicles within a single year? So that is a huge amount of cash that Tesla would be amassing over the next few years and continue to do so over the next decade and beyond. One quick highlight here is a very meaningful highlight here. While 2021 was a defining year for our company, we believe we are just at the very early stages of our journey. Thank you for being a part of it. So needless to say, we keep saying time and again on this channel that Tesla has another decade of growth ahead of it before it could get to 20 million plus vehicles. So this further confirms that 2020 and 2021, while were very exciting for all of us investors, those are just the beginning years for Tesla growth story. This is one of a powerful slide in my opinion. If you look at the operating margin for other legacy automobile companies for the trailing 12 months, you will see that Tesla started out at a negative operating margin, now has surpassed almost all of them. And by the end of 2022, I believe Tesla would be somewhere north of 15%, surpassing all of them combined. So the profitability of this company is indisputable. Other automobile company has years, hundreds of years to figure out manufacturing practice, to improve its vehicles and innovation in order to get more operating margin out of the product. But it only peaked right around 10%. And Tesla is now getting there with just a few years of volume production. And this is just the beginning of this company, right? Roughly delivering less than 1 million vehicles this year, and it is already at over 10%. So this operating margin will only going to grow from here. So I think this is one of the most telling chart to show how Tesla is the leader in manufacturing innovation and, of course, battery technology. The outlook for Tesla is very promising. Over a multi-year horizon, Tesla expects to achieve 50% average annual growth rate in vehicle deliveries. So this past year, Tesla has definitely surpassed 50% annual growth rate, and I expect that Tesla could continue to do so for a few years out in the future. Tesla also mentioned that the pace of production ramps in Austin and Berlin will be influenced by the successful introduction of many new products and manufacturing technologies in new locations, ongoing supply chain related challenges, and regional permitting. We are making progress on the industrialization of Cybertruck, which currently planned for Austin production subsequent to Model Y. So I think Cybertruck is in line next if Austin can successfully and efficiently ram Model Y, right? So Elon mentioned on the phone yesterday, I paraphrase, that the introduction of new product could hurt temporarily the number of vehicles produced and sold in a given year. So if Tesla rushes to get the Cybertruck in, the number of vehicles delivered would not have been 930 something thousand vehicles for 2021. So that is a fine balance that I think that delaying the Cybertruck a little bit is not going to hurt Tesla revenue in the long term, but it will give Tesla a little bit more time to produce what it produced best, which is Model 3 and Model Y for the time being, before introducing a new variable. So I think that is a really smart approach. Of course, if you have been in line waiting for the Cybertruck, it is very frustrating, and I get that. But I think from a business and manufacturing standpoint, the Cybertruck delay has significant meaning to Tesla's bottom line for 2021. Taking a peek at the balance sheet here, I will note that Tesla has very little liability at this point, right? The total liability for Tesla is about $30 billion, while the total asset is $60 billion. This is clearly a very healthy company when it comes to balance sheet. If you look at convertible senior notes, it was zero, and it has been zero for a while. Tesla has paid that off in 2021, which speaks volume to its financial strength as well. Long-term liability for Tesla is very minimal compared to the total asset that Tesla would have. This company could easily wipe out all of its debt within a short amount of time, but in a low interest rate environment here, I don't see that being a wise choice, but I see that Tesla has twice as much of assets over its debt, which is very good. The current asset is about $27 billion, and the total current liability is a $19.7 billion. So working capital, which is current asset minus current liability, Tesla has about $8 billion in working capital, which is also a phenomenal number in terms of liquidity. And of course, if you look at the statement of cash flow, Tesla has consistently piling up cash over the last few quarters. And right now, cash and cash equivalent is at $18 billion. Of course, the stock price doesn't reflect reality, unfortunately, and we will go over the stock price in a little bit. But looking at the overall financial situation for Tesla as of the end of 2021, I don't think that our investment in Tesla is risky at all. In fact, I think it's really safe, and you get a very safe investment with trajectory for growth, right? It's something you don't get with, say, Apple, right? Apple's growth trajectory cannot be anywhere near Tesla. Of course, it is a very safe investment. Apple has, almost $100 billion of cash on its financial statement, but Tesla is a growing company. It is just a matter of a few more quarters before Tesla get to $100 billion in cash. And Tesla has trajectory for growth. From 1 million vehicles delivered in 2021, it could get to 20 million vehicles delivered by the end of this decade. So that is a 20-fold increase on top of a company that is piling up cash. It cannot be a better story to tell, in my opinion. So back to chart analysis. Here is the 30-minute chart for Tesla. Since the trading day is still going on, I am looking at a smaller time frame right now. So as you can see, yesterday after hours when Tesla announced its earnings result, the stock went as low as $879. And then it started bouncing back up. By the time Elon Musk got on the conference call, Tesla went up as high as $975. So that is a very big swing, even though after hours there. Today, the stock looked to open almost flat, but immediately after open, Tesla moved down vigorously, broke through the pivot point here, and right now it is still sitting on the low of the day at around $860, give or take. The 200 days SMA right now is $811, which is the red dotted line here. It is not too far away, and it looks like it is within reach for Tesla. It is the next support level after the current support level at $853. So I think that if Tesla breaks $853, it will head straight down to $811. As a matter of fact, the pivot points for tomorrow, the bottom pivot point is $799. This number could change because we're still in the middle of the trading day, and the pivot points are the calculation for the last 2 days of price action. So depending on how Tesla move for the next 2 hours, we can see the pivot points move accordingly. But right now, the bottom one looks to be at $800 or $799. So it is entirely possible that Tesla could get back there. The middle pivot point is $882, and the top pivot point is $913. In either case, Tesla has been moving down drastically on excellent earnings result. So this can only lead to one thing as an investor. In my mind, this is an opportunity to buy. The stock price is not only cheaper today, as investors, we have better information to make that investment decision today. So it does not seem to add up. And I do think that in the long run, investors that take advantage of the current retracement right now would be coming out ahead. The volume right now is 125%, and we still have 2 more hours to go. I do think this is fairly low volume for the day after earnings. I think for a typical stock after earnings, we're looking at between 200 to 300% on the low end, and it could go up to 500% on the higher end. Tesla looks to close the day at around 150%, which is very low for a stock that has earnings yesterday. I also think that with the sell volume dramatically today, Tesla is probably looking to flush out all of the sellers who have been accumulating shares on a short-term basis, either on margin or otherwise, who are now forced to sell. Once the set of sellers are out, I think investors, and including institutional investors, will start coming in. We will start seeing upgrades on Tesla price targets from various analysts, especially the bullish analysts on Tesla, will start upgrading Tesla based on new earnings result, and we should see Tesla moving up. But that is not based on technical analysis. It is just based on what I experienced with previous earnings. From a technical analysis standpoint, let's go to the daily chart here. So it's important to note that Tesla has been moving very vigorously in either direction. It has been extremely volatile ever since October of last year, right? So for the last 4 months, the stock has been moving pretty wildly. Now, before that, of course, Tesla also have very volatile period. But if you look at the size of the candles in the past, a daily swing is usually between $30 range or $10 range. Nowadays, we're looking at $60, $70 to $100 range, right? At the opening today, Tesla was at $936. Right now, Tesla is at $860. So that is a $76 swing, and the day is not even done yet. Let me go back to November of 2021. This is the around the time when Elon Musk announced his selling of Tesla shares, and this big candle here is the result of him selling around, I believe, 3 million shares on that day. So ever since then, he triggered a series of volatility together with Q4 being highly anticipated for Tesla from a performing and delivery standpoint. We've seen the stock have been moving up and down vigorously. The good thing is that it creates opportunity for trading. The bad thing is that this definitely scares a lot of retail investor out there who are not equipped to deal with the volatility in Tesla. So from a chart analysis standpoint, this is a multi-top behavior here. I'm not surprised that Tesla moved down this way from a technical standpoint. Of course, from an investor wishful thinking standpoint, I'm disappointed that Tesla has been moving down terribly after excellent earnings. But if you look at the technical pattern, this is a fairly bearish pattern with multiple top, and Tesla has now retraced back to the base before the breakout way back in middle of October here. Let's also take a look at the weekly chart. So today is Thursday, so we only have one more day for the week. If you look at this weekly candle, it is extremely bearish. It is not even a bottoming candle just yet. We also see the last 4 weeks, basically, Tesla has been moving down from the high of about $1,200, right? So what would it take for Tesla to move up from here? First of all, this is a really good weekly support right here, right at $853. And the next bottom would be 811, which is 200 days SMA. That is a very, very important support for Tesla. If Tesla loses 811 and stay below that for a day or two, I think all hell break loose and Tesla could go down further, potentially down to the 600s. But for now, let's see if Tesla can contain $850 something for today, and whether or not tomorrow it would touch 200 days SMA and bounce right off of it. That would give us some hope into next week. Back to the hourly chart here, as you can see from Monday to today, Tesla is making a double bottom. A53 is arguably the double bottom for both days. The difference though, however, is on Monday when it made this bottom, RSI was really oversold. Today, as it reached that same price level, I don't feel like we're at oversold just yet, which tells me that we could probably go down further tomorrow before reaching oversold. So for all intents and purposes, I would stay away from call options right now. For put options, I think the premium is fairly expensive, and unless you're willing to pay for high premium hoping that it would go even higher, I would also stay away from put options. I think at this point, the best course of action is to wait for Tesla to get to around $800 level, and then see if RSI reach oversold territory before considering a call options for Tesla to bet on the upside. When Tesla get to below $800, it is also an excellent opportunity for leap call options if you plan on holding your options for a long time. And I do think that given the excellent earnings, people will come around to buy Tesla. Analysts will have upgrades, and Tesla will resume bullish. It might not be right tomorrow or next week, but it is just a matter of time. So the shareholders, we have a lot of time. For the option traders, I think that you have to be very careful with holding on to your long-term call options if you only have a couple of months out. I would find an opportunity of bounce to exit even today or tomorrow. And if not, maybe next week Tesla will bounce a little bit, but anything between 811, which is 200 days SMA, and 100 day SMA 958 here is simply just a bounce and consolidation. So it has to get to above 100 day SMA 958 for me to feel comfortable, and for it to resume bullish, it needs to get back to above $1,045, which I know is about $200 from here. So that is probably not going to happen in the next day or so. So I hope you find the information helpful. Comment down below if you have any question. I'll try my best to get to them. If you want more immediate attention and answer from me, feel free to join my Patreon community where you have direct access to me. You can send me messages and I usually answer those much quicker. Other than that, thank you very much for paying attention thus far, and stay strong as Tesla investors. In the long run, we know Tesla is a wonderful company and it will go places. With that, I rest my case. I hope to see you guys in the next video. Bye.